happening.
more about
Sam,
this stuff than
come
either
on and
of
join
us.
us. Good to see you
Sam.
again.
Thanks for coming today.
Hey, good to see you. Mwah.
Good to see you too.
Welcome back, Sam. How's everything? Can you introduce yourself?
Thanks.
I know.
You look lovely. Can you introduce yourself to everybody?
Hi, I'm Sam Panella with Raymond James. I'm their retail analyst.
Excellent.
So,
and
Sam,
you used to be an airline analyst too. We're going to talk to the airlines in a second.
Yeah, let's first touch on Gap. I mean, you know,
Okay.
this company has been struggling. They have a new CEO. You know, they are trying to, they didn't make a net profit, but because they cut costs, it's not necessarily that they're selling new hit products out there. What's going on with this company?
You know, they're really trying to turn it around. What happened about a year or so ago, they lost touch with, you know, who is their target market. And with any retailer, you really have to know who your target market is in order to have the right merchandise in the store for that person to buy. So I can recall about a year ago, they actually said, we don't, you know, we're trying to find our target market. Now they've narrowed that down to somebody probably in their late 20s. So somebody that grew up with the Gap brand and, you know, may come back as a customer. And in the midst of all of this, they are trying to, you know, remodel their stores, get rid of, you know, the real clearance-oriented feel that these stores have had more recently. And if you go in the stores now, it is a better atmosphere.
Do you have a rating on Gap?
I actually do not cover Gap.
Okay, and what was the stock a year ago when it was having all those problems, by the way? Was it lower than it was today, now that the problems have sort of cleared?
You know, actually the stock's moved up since around the time when Glenn Murphy, the new CEO, has come in July. And I think really, you know, investors out there, you know, it's in turnaround mode and kind of giving them a little leeway here.
The reason why I asked the question and that it's phrased it that way, by the way, also, and the reason I dressed this way, I knew we were talking retail today, and I'm just trying to underscore the fact most of the world is out there trying to dress down because it's the Wednesday before Thanksgiving.
Yeah.
And I'm out here playing guitar today, so you would think I wouldn't want to dress a suit, but you got to do things exactly opposite as everyone else when you're investing. Buy Gap when things were horrible, sell it now that things were a little bit improved. You have a target for it, say, in 3 years? Any chance this thing goes above 25?
We'll say I don't have a target. I don't cover it.
Do you cover Abercrombie?
No, I cover a lot of the women's specialty apparel companies. But, you know, when you're covering these names, there's so many retailers out there. You have to pay attention to everything that's going on because it impacts some of my names.
Just covering a few names doesn't mean you ignore the rest.
Exactly. I listen to all the conference calls, pay attention to all the numbers coming out. And I think it goes back to what we were talking about with the Gap lost touch of who their target market is. And Abercrombie & Fitch, they know who their target market is.
Exactly. I mean, you go in there and I don't want to shop there. It feels like I'm in a nightclub, you know, but they very know who their market is. They're targeting it, and they're staying on that. They don't divert from their mission.
Right, and they do have those models at the malls as well.
Yeah, so
they are trying to bring you into the store.
That's some kind of marketing. You know, Sam, and actually, everyone's looking at the holiday season. We're about to this whole traveling thing, and, you know, the airlines, dollars at oil's at $100 a barrel. Everyone's trying to panic. Do you factor that? As you're covering these retail names, do you even factor macroeconomic factors into the picture that you arrive at?
We do. You know, I take that into the big picture, but, you know, I do believe at the end of the day, it comes down to the retailers' merchandise. And if you can get it right, we are seeing people, they're buying. They are out in the stores and they're buying. They're not shopping everywhere. And it's a matter of, you know, having the right merchandise, but then also controlling your inventory, controlling your costs. And, you know, and that's what all of these, like Abercrombie & Fitch did a very good job of that, and Gap did do a good job of that. So that's all important. But, you know, you do have to think about the macro when you're investing in these names, because sometimes, you know, you just can't fight it.
But to the point, you focus on the name itself.
But you focus on the name itself, and you want to, and yeah, you want to buy quality, especially when there's a lot of headwinds here. And if it's getting, you know, the stock's coming down because of the headwinds, and yet they're executing, hey, it's a great buying opportunity.
What do you see online happening? Part of Abercrombie & Fitch, one of their divisions, one of their stores, Rule, they came out with the website. It's really super cool. Again, after their target audience, if the sales were up 55%. So do you see a lot of online sales still this time of year?
Yeah, a lot of online. And what you'll see happen too is, you know, if you get frustrated in the stores, if you have a very good e-commerce site, people, you know, maybe they'll not buy in the store, but they'll go home, get online, and buy it there. And we're seeing every year e-commerce sales are becoming a bigger portion of the business.
And you know that you've got secular growth in online sales, even as retail might be topping itself out.
Sam, thanks so much. We'll have you back in a little bit. Yeah, we're going to have Sam back for quick shots, but first, heads up.